Hi, good afternoon, Nitin.
Welcome, Shubhrendu.
Thank you, Nitin. Great to be here.
So this is your first time to our VONG SDG Cafe. Let me give you a brief introduction about what this is. What is it that we do in the VONG Cafe? So Shubhrendu, you might know that we are running an NGO by the name Omisha Foundation. And our focus is on building or nurturing conscious global citizens. So recently, we have started an initiative called the VONG movement, which is Voice of the New Generation. And this is about building an awareness and understanding in the new generation about global social issues, and also giving them a platform wherein they're able to influence the attitudes of the society. Because most of the issues are in some way happening because of practices and cultures and attitudes of societies over generations. And we believe that this can actually be influenced or broken mostly once the understanding is built in the new generation. So today's discussion is one such step, which is essentially about getting an understanding of the role of industry, innovation, and infrastructure in sustainable development in the world. So, my background, Shubhrendu, I am the founder of Orion Square, which is an initiative of Omisha Foundation. And Shubhrendu, for everyone, is a co-founder at MITI Ventures, which is building a UFIN brand of services for small merchants. Shubhrendu is also an active angel investor in emerging markets, and he's tasted both corporate and startups. And his career is essentially around moving money, digital payments, lifestyle for banks, telcos, merchants and payments. and lot in Europe and Asia Pacific. He sold to both private and public sectors and built ventures for large corporates and startups in telecom, media, and technology. And now he's very humbly learning more about consumer psychology and decision making, and is also a passionate squash and tennis player. So,
thank you for the kind words, Nitin.
A very warm welcome to you once again, Shubhrendu. So I have a few questions, which have come to me from the new generation, which will help them understand this a little bit better. So let's start with, getting a very basic understanding of how does infrastructure even affect sustainable development?
Good question, Nitin. So first, I'd say, look, it's not just the new generation, it's the new and improved generation. So the level of consciousness that they have is way much more than we had when we were going to schools and colleges. So I think it's a big hats off to them. So back to infrastructure, Nitin. So you remember our classes when we were told, hey, if one person has to talk to another person, A has to talk to B. You just draw a straight line. If now there's a third person, C, now if all have to talk to each other, then A has to talk to B, A has to talk to C, and B has to talk to C. So the infrastructure becomes increasingly important as the size of your market, the size of your country, the size of people that you interact with grow, right? So infrastructure may be less important relatively in a small cluster that is detached. But as soon as you have more participants, infrastructure becomes the lifeline. So if you look at the human body, infrastructure is really the skeletal system and the nervous system, right? So imagine if you look at any country as a human body, if you don't have the infrastructure physically that connects it, whether that's road or rails, waterways, or the ones that deal with transactions, commerce and payments and logistics, it's very difficult for the country to develop, whether it is sustainably or not. Now, the reason why you see that there are examples of why infrastructure development is getting more aligned with sustainability is that the social purpose and the economic incentives are starting to move in the same direction, right? Earlier, if you had to serve a business, you would say, hey, I will serve the top 10% in the top 5 cities because I can't afford to conduct my business in the far-flung areas. So you remember even today, even after privatization, Air India still has to run these stations in far-flung areas, which private companies don't want to serve as airlines. So how do you make sure that your incentives are covering the entire breadth and width and height of the country? How do you make sure that nobody is left behind? So it has both a geographical coverage and also a citizen and resident coverage, which is for most parts been missing when we talked about industry and infrastructure together, right? So you could have a very imbalanced view of development where power generation, manufacturing, services get concentrated because of legacy reasons, because of their infrastructure development, because of their physical location being near the port cities. And then you have the hinterlands, the interiors that may have the natural resources, the physical resources, but don't have the same level of development opportunities. And that leads to, again, mass migration from one state to the other state, which creates some social friction as well. So if you can create a balanced development, make it sustainable, you actually bring down the need for people to migrate just to make a living, because they can actually make a living in the hometown with their family and they don't have to move. So for me, infrastructure really becomes important in a country the size of India. It has been neglected in the past because we were trying to do it more as a 5-year planning cycle. But now you're actually starting to look at this from the market forces, and then kind of a public-private partnership that has evolved is making it more feasible for the more important sectors like energy, the roadways, manufacturing, and I would also call financial services a key part, because unless you can move money, all of the commercial activities start getting slower, and there's a certain friction that comes in. So having the neural network, almost like a nervous system of how to make money flow, is critical to all of these economic activities in a country like India, Nitin.
Wonderfully explained. No, Shubhrendu, I think this understanding of infrastructure being very fundamental to sustainable development, to inclusion, I think it's very, very clear now. Okay, amazing. So tell me this, Shubhrendu, is there some aspect of a design? So one aspect of sustainability is also about reusing, recycling. So and typically infrastructure takes a lot of resources. Building the infrastructure also takes a lot of resources, and it's always not done sustainably. Is there something that can be done to the infrastructure design itself, that the infrastructure is also built sustainably, not just leading to a sustainable development, but also being built sustainably?
There's a lot that's actually already being done, and some of the best examples actually are in Africa, especially in the sub-Saharan Africa. So if you look at countries like Ethiopia, where power generation is going to be an issue, because you are not going to have a coal-based power generation. You cannot have a hydroelectric at the same intensity as you can in, for example, other markets. Where do you turn? You turn to the sun. And if you are looking at a solar energy-driven system, you cannot create something which is on a post-paid model where you're giving out bills on a monthly basis, because majority of your consumers are not going to have enough money to pay that big amount of $50, $100 at one time. So what you do is you convert that more like we are used to telecommunications into a prepaid form. So you use it up to a given value of your card, and then the electricity stops. And then you refill it, and then it starts again. So the solar grid, and especially the way that what is called pay-as-you-go solar energy is coming up in Africa, also in some parts of India from similar companies, where the efficiency of the solar power actually is improving. The way that the consumers are using that solar power is more like a sachet, because these sachet was something that Southeast Asia taught to the world, where you don't want a full half-liter bottle of shampoo because that's going to cost 200 pesos. But if you can make that into a 30 ml sachet, which is good for 3 washes for 2 days over the weekend, then you can price it at 5 peso and it sells. So the same prepaid model and the way that infrastructure can still make money, because again, the core mantra, Nitin, is you have to do well to be able to do good. Because most of the times when we were looking at developmental projects, it was either with a missionary zeal saying, hey, it is donation, it's going to stop all evil, it is going to do good. But then what happens when the donation stops? You regress back to square one. So when you're looking at developmental projects, it cannot be with a missionary sense of mind. It also cannot be with a mercenary sense of mind, because then you're killing off everybody and all the resources anyway. So it has to be somewhere in between, where you can actually start generating some valuable returns from the project. And these returns can be plowed back and also make life better for the people who are involved in the community. So what you see now is large infrastructure projects going more into this prepaid mode, and looking at spreading both the raising of funds and the use of funds for distribution of the funds into more beneficiaries of get centrally raised and centrally disbursed.
Yeah, understand, makes sense. So I think what you're talking about is a whole lot of reducing waste.
Shut the fuck up, Aprilla! No. Do not mute me, Mitten.
Let me just
Do
take care
not
of this.
fucking mute. Do not fucking mute me. Stop fucking muting me. Nigga, oh my god. Nigger, 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 nigger.
That was interesting. Okay. Yeah, so I think what you're talking about is also a lot from a wastage perspective, to reduce the wastage and to make it sustainable in the sense that it becomes affordable, and how you make it viable, and it doesn't stop once the development grants or some of these funds dry up. How about also the infrastructure design being done so that there is very little new stuff that has to be developed, and it's also reuse of the current infrastructure, and it can be done faster, and there can be less wastage from that perspective as well. So there's a lot of reuse of what's currently available. Is there some thinking in that direction as well in terms of sustainable design?
And if you look at the agriculture sector, which generates waste, and we all know this because then it gives issues like the stubble burning and contributes to the air pollution. But if you look at it from the farmer's point of view, I would rather burn the stubble than carry it to the nearest processing center, because it costs me even more to take it there, right? Now, if you could make the process of making those briquettes from the stubble into a more portable form so that it can be taken to the farm, not at the processing sector, right? Then you are taking away the logistics and transport cost away from the farmers, and then it becomes economically viable for them to not burn it, but then just to process it in the local briquette making sector, because it's smaller, it can be viable at a smaller capacity, and then the cost of moving the briquettes itself is going to be much lower than the cost of moving all the stubble from the farms in a village to 50 kilometers away. So that's what companies like Biofuel Circle in Maharashtra are now starting to do, where you can actually start treating the economic incentives and the core reasons why the farmers are actually burning the stubble and not selling that waste.
Right. Yeah, makes a lot of sense. And yeah, so yeah, I also feel that
it's
a lot
just the
of
same
thinking
briquetting
about
machine, but made smaller, lighter, which can run on lower capacity. So you can have 10 where you only had one giant briquette making machine.
Right. Yeah. So I'm also thinking on the lines of how the internet infrastructure, for example, came about, wherein there were servers and the existing servers were interconnected. No new servers had to be put in place for such a great architecture, great infrastructure to be built. Something on those lines.
Yes, but then even when you have these islands that don't talk to each other, you need to have a common language, a common standard that makes them talk to each other. So this is what the beauty of TCP/IP was, that even if you had different servers talking and running on different operating systems, they could still talk to each other because they were talking the same language, which is also what happened when SMTP happened to email, that you could connect different email systems over SMTP protocol. So I think that's why having an infrastructure based on open, interoperable standards is so important, because even if your value is being created in the proprietary islands, you still have to talk to other proprietary islands.
Right. I'm thinking also on the lines of reducing wastage. So when people are owning their own infrastructure, their own systems, if they can be interconnected and you can have a pool of those resources which are then available. I mean, what Uber, Ola have done, for example, is something similar. So actually, there's a lot that is happening in that direction already. So infrastructure for transportation is being built. So are there more such initiatives, that you can think of where they are now pooling in resources and in a way reusing the current unused, personal assets and building, useful infrastructure using that?
The shared assets economy, or more the sharing economy, obviously rotates around the fact that my ownership on assets is now getting more diffuse. I would rather have experiences than fungible, tangible assets. And I'm okay to have a shared ownership with others. Now, what you see in some of the more fancier utopian ways that you can use computing power is you have these infrastructures like Filecoin, which actually say, hey, can I use somebody else's storage if it's not getting used? Can I use somebody else's computing power if it's not getting used? So everything that looks at having a distributed consumption of a resource, which is spread in ownership, but then you can incentivize them, whether that's by giving tokens, for example, right? So you've got experiments happening, but because the security is still not completely worked out, there will always be issues when you are doing something on a distributed consumption. So for instance, you had cases where Starbucks would give you free Wi-Fi if, for example, some of your computing power for the time that you were in Starbucks could be used for a different purpose, right?
I see.
Would you be comfortable doing that? Probably not. So it also depends on the risk aversion of the consumers and how the security is orchestrated.
Awesome. So I think it's time that we delve a little bit into the area that you're specializing in, Subhu. Can you tell us a little bit about the nuts and bolts of the financial services infrastructure? What is it all about?
So at a broad level, Nitin, look at it in terms of 3 layers, right? So you have the central bank, which sets the policies, which also controls the currency of that country in a way. If you look at the 100 rupee, 10 rupee, 20 rupee note, you see the signature of the Reserve Bank of India's governor, and it's a promise to pay, essentially. So what you have is a piece of paper because it has the promise, it is valuable, right? Now, the first level is between the central bank and the large banks, which are connected to the central bank. The second level is between these large banks and the other smaller banks that we interact with. And then the level that we see is, as consumers, people, businesses that we pay. So money is effectively moving across all these 3 levels. But what we see as the coins and the notes, the currency, is only a small part of it. So if you go to a bank and ask them, hey, you say I have X rupees in my account, can I go and see your vault where that money is? It's nowhere, right? It's just numbers on a balance sheet. So if you look at how that has changed, the way that money is being managed is getting fundamentally questioned. Because if you look at how money was being issued, you had private banks like HSBC also issuing money, right? So in Hong Kong, if you look at who's issuing money, even today, the Hong Kong dollar, you have private commercial banks who also issue the money there. If
Don't
you
they
look
issue
at
credit lines? I mean, isn't that
no,
more
the
about
currency
credit
notes.
lines or
the currency notes? So
okay.
Over time,
Are they printing the currency?
Yes. So over time, over the last 200 years, what really happened is the role of issuing money went away from private banks to the government-controlled, government-influenced central bank.
Yes.
Now, what has happened is you're seeing digital forms of payment creeping up from the consumer interface. So they are going more digital, and you see it every day with a mobile wallet, right? So you pay with a wallet, you spend because you're getting rewards on the wallet. But ultimately, it still goes back to the same monetary system where you're issuing the currency notes and the coins. Now, what is happening, interestingly, is if you start looking at some of the tokens as a form of payment, then the control and ownership again starts going away from the central government, the central bank. Now, that can be dangerous because suddenly one day you realize that you cannot actually control the inflation, because whether you print more notes or not, people aren't using those notes, right? Which also happens in some countries which have a tremendously high inflation rate where the US dollar actually is used. Now, that becomes a big blow to the sovereign powers and control of the central bank representing the central government. So now you are seeing a very interesting conflict on infrastructure, on what form should money take, right? So in many of the countries, you see that the central bank is saying, look, we will actually issue the digital currency. Private sector, you just have to be the instruments of carrying what we have issued. But there are others who are saying, why can't each city have its own currency? Because that stimulates local consumption. It also stimulates the local economy. So can you have a London shilling or an Amsterdam guilder again? So you are seeing these tensions between the city level consumption that needs to be local, that helps and benefits the local businesses. And then from the top, a central bank directive that says, private sector, please don't get into this. It will be something that becomes a national infrastructure because the stability is what we want to control.
Understand. I didn't quite get the idea of how local currencies would benefit local cities.
So there's been historical precedents for this. So if you imagine that each city had its own local currency, which is used for the local consumption in the shops, which is used for travel in that city on the public transport, it effectively incentivizes you to spend locally.
Right.
Right. So because you would have a friction in converting your Amsterdam guilders into Paris francs.
Understand. Okay. And also, what all comprises of the financial services infrastructure here? Are you saying the central banks and the banks and?
We looked at these three levels, Nitin. But if you look at how we interact with the financial services today, you have, and in India, it has undergone tremendous changes over the last 10 years. And that's why it's so beautiful. Something which every Indian should be proud of. Which loosely is also called the India stack, right? So at the bottom, you have something which is your digital identity. So you have the Aadhaar infrastructure. Now, because it is universal, and granted that there have been some teething problems, granted there have been some privacy issues, but overall, it is giving you a fundamental building block of digital identity. Now, on top of that, you have the unified payment interface, or the UPI, which makes it possible without knowing or having to fill out all the lengthy card numbers, bank details numbers, etc., which makes it very difficult for you to send money or receive money. But just by using a pseudonym as a virtual address, you can actually send money to anybody, whether that's an individual or a business or a merchant. Now, on top of this, you're building a kind of a digital signature infrastructure so that people can actually digitally sign documents. They don't have to photocopy them. They can look at these data vaults. So even the CBSE mark sheets are now available in the digital locker, right? So that becomes a kind of a digital signature framework on top of the payment. And on top of this, you have the consent architecture, which means that you can actually choose what part of your personal information you want to share and with who and for what purpose. Now, if you are looking at this, it's very loosely coupled. So again, a big, I would say, hats off has to be given to people in the UID AI, people like Nandan Nilekani, people who crossed across political boundaries. So it was not hijacked by political ideology. And today you can reap the benefits when you have Amazon Pay, Google Pay, Phone Pay, and the others utilizing the infrastructure and creating value by offering the services on top of it, right? So the way that booking a flight, the way that you pay at a merchant has completely transformed. You actually don't how many times do you actually go to a bank branch? How many times do you actually write out a check? So India actually has used, if I use the term, a pole vault to cross over to the new world in financial services.
And so it's ahead of several other economies as well who are taking time to transition.
Yes, because even if we say that, look, Japan and US had been the powerhouses of technology, but the ways to pay a merchant, the ways to pay an individual, the way that banks paid each other is still very slow. So what India has achieved is still, I would say, 5 years ahead of what is used in the US for making consumer payments or business payments.
Awesome. Awesome. I didn't quite get how you said that on top of the UPI stack, there is the digital signature infrastructure, and on top is the consent architecture. Is that, how does that come on top of that? How does that form part of the financial services, the digital signature and the consent aspect?
Because the business models are changing, right? So we always used to have business models, especially in the banking, financial services, insurance, that were based on getting a fee income, getting a commission. But now the competition has become greater because the switching costs have gone down, right? So just like earlier, you were able to switch your telco. You could move from a Vodafone to Reliance to Airtel. So now you will be able to do the same with your bank, right? So as the switching costs go down, because you have open banking, you have embedded finance, which effectively means that I can open a bank account, I can close a bank account using third parties. Because I have the underlying identity, which is available on the base layer. So if I look at the business model moving away from a fee income to a data monetization income, right? Because the more the hotel chains, the more the transport companies share data about what your activities are with a lending firm, the better and more personalized the rate that you will get from that lender will get, right? So it's no longer that anybody who walks in will get a 8% loan. If you can show that your history is very consistent, you have been paying off, you might be able to make a 7% loan. So having this personalized pricing of risk comes with data, and which is why businesses, because they want to scale up the data, they are going down on the fee income and saying, actually, a data-based income makes much more sense.
And that comes from consent.
Becomes important. Yeah.
So individuals give consent that, you know, the bank can use my data.
Yes. So if you look at what is called the Sehmati architecture, it's all about that. If you look at what is called the accounts aggregator model, it's all about that, because what I'm doing is at the point of buying a flight, I can choose the insurance offers from 3 different insurance companies for the same flight. And it happens at the same time. So that's the beauty that, look, I was able to share my travel details, my personal details with 3 insurance firms. And at that point in time, when I'm doing a checkout on the airline, I can actually choose which insurance plan I will take.
Awesome.
So that's something where I think India has outshone the other countries when it comes to having these, I just call them a beautiful layer of decoupled transaction platforms that sit on top of each other. They do exactly the thin part that they're supposed to do. They don't meddle with what the other parts are doing. And because they are good at what they are supposed to do, they work nicely one on top of the other.
Awesome. I'm not quite sure if people are aware of these architectures and where
they must, because if you look at the India stack, I think it's certainly a beautiful and elegant solution that others are now trying to follow.
Awesome. Awesome. So I understand the consent part. What about the signature part? What's the significance of that?
So today, when you look at wet signatures, they were a necessity, which meant paperwork. If you were doing foreign trade. It meant getting piles of data approved from your bank to the ports authority to the customs. Now, with the e-signatures, you're cutting down on the red tape, on the paperwork. And if you can do an e-signature on your own documents, whether those are your personal documents or whether it's a business document, you actually have a verifiable, authenticated document which is accepted by the other side, whether it's to clear your documents, to clear your goods at the port, or whether it is to give you credit, or whether it's to give you insurance.
Understand. But how does that link to the financial services?
All the financial services include some form of paperwork, one way or the other.
Right. But does it necessarily sit on top, or is it a side thing which runs across?
It sits on top. So the way you view it is, look, I can identify everybody and anyone. I can know that, yes, it is person A. If she is claiming to be person A, then I can move money between person A and person B in a smooth manner. Then I have automated the complete document exchange flow. So I don't have to take my bundles of data to do a transaction, whether it is to open a bank account or get an insurance policy or get my goods cleared at the customs. And then on top, I'm saying, hey, you can actually share your data for a given purpose and for a given time duration, which actually also gives you more services, because you are getting the price flexibility. You can choose the best offer. And that is why it is different from the other internet giants, which still have the data, but how much of your consent goes into it? Right.
So isn't a digital signature, simply speaking, an authentication mechanism?
It's more than that. So it's slightly more than that. I would, in the interest of time, urge everybody to look at the India Stack presentations on the internet. And it's something that really is mind-blowing, Nitin, when you look at the power of how you can make insurance decisions, lending decisions based on flows rather than assets, and how you can make inclusion possible for those who are good businesses, but who were never visible to the formal banking system.
So this seems pretty forward-looking, and I think my next question was also related to this. If the financial infrastructure should be built proactively, or should it be, catering to, pandering to the demands of the industry, as in how it develops? So, isn't it possible that we may develop an infrastructure which may not actually be used the way it was envisioned, because the industry doesn't move that way? So how do you sort of look at how the infrastructure should be designed and rolled out? Would you drive how the industry works, or would you be ready to be customized based on how the industry reacts?
So we have both examples in front of us. So if you look at China, for example, where similar digital financial services, digital payments evolved, you almost got proprietary stacks of everything that we talked about in the form of Alipay and Tencent and a few other vertically completely aligned, so that everything was happening within the same company. And it was proprietary. It was not 100% interoperable. And that created issues, because once you got big scale for each of these entities, you saw that they were in a strong position to influence and use the data that they were generating. So the controls were less compared to a model like India, where the infrastructure has been built one base layer on top of each other, more as a public good, right? So, for example, NPCI in India is not a for-profit company. It's still currently a Schedule 25 company. So in China, what you had is 2 or 3 large organizations that created their captive ecosystem, and they were offering all kinds of services, but to their ecosystems. And then they were talking to each other, but not in an interoperable way. So that is now getting scaled down if you see the overall trend. because they were covering everything from transactions to daily use transaction services like ride sharing, to even insurance, to even media and content. So the power of such a vertically stacked, completely in-house system was getting a little too difficult for, I would say, a homogeneous, balanced development across the country, right? So that's why you saw a kind of a, I wouldn't say control, but a kind of a message to the internet companies that you need to now start following the rules, you need to break your businesses. But that didn't happen in India, because now you have the infrastructure, at least for the financial services, which is available to private sector, and you can build services on top of it. Now, if there is a vacant need, some business is going to fill it anyway. So if you look at markets like Indonesia, where you don't have the equivalent of a Bharat bill pay system, where all the billers and all the people who have to pay the bills are connected, there's a private sector company which is trying to fill that gap. So it is individually getting banks to come and join its platform. The banks are not interested to build it on their own, but it will take them time. And then they will also become a proprietary large island. And then ultimately the government will come in and say, hey, you can't actually run this as a proprietary island. We have to make it interoperable infrastructure. So again, the difference is China didn't have this kind of a identity payment in an interoperable infrastructure, which was effectively created as a non-for-profit initiative. And then countries in the middle, like Indonesia, for example, they are somewhere in the middle. They are trying to make it happen, but they are now looking at having both the applications and the infrastructure come together at the same time. So I think what India did was, it didn't go very hard on the services, on the applications on top, until you had the basic infrastructure in place. But then everybody is able to use that infrastructure. If, on the other hand, you look at markets like Indonesia, Philippines, where this infrastructure is missing, you have private sector coming in, but they do it for profit in a proprietary closed manner. And then at a point in time, they become too big. And then the government has to step in and say, look, you have to dismantle it, or you have to make it available to the others. And the economic incentives then make it difficult for this proprietary incumbent to offer the same services at the same cost to the other players who are their competitors. So where do you compete? Do you compete at the infrastructure, or do you compete at the applications and the value-added services? I think that's where the difference in these countries lie.
Right, right. So, by competing on the value-added services, it also compels everybody to come up with better services. So in the end, the consumer wins. And if you control the architect, the infrastructure, then you could be controlling the prices, and so it's not a gain for the consumers that way.
So if you look at the simple way, now everybody pays their water bill, their electricity bill, their phone bills, and the way that we pay these bills, and if you look back 10 years and how we used to pay the bills and how you pay the bills today, so that's the power of the infrastructure.
So what kind of innovation is happening? I mean, you've already spoken about the India stack, and that sounds like more learning from how things have happened in the other countries, and setting a base for us to build on. I'm looking at, or trying to understand the nature of innovations that are shaping up to make use of this kind of infrastructure, and what other innovations are kind of shaping how financial service infrastructure space itself takes shape. And if some of this innovation can also help in alleviating poverty, for example.
I'll come to that, Nitin. So see, innovation is not only about launching new services that didn't exist. It's also about taking services which are already available, but only to the top 5, top 10% who can afford it, and then bringing it to the mass market, taking it really down that pyramid. Now, if you look at the way financial services card payments, rewards, payment acceptance was only available to the top tier of consumers, the top tier of businesses, and the top tier of merchants who could afford a credit card or a debit card machine with the printer, pay for the servicing every month, have a lease line to connect. So there was a lot of fixed cost and operational cost. But if you can make those similar services available to everybody, which is what the QR code has done, right? So if you have a QR code, any merchant can accept your payment, right? All they need is to be able to accept that payment. So you're taking a service available only at the top, at the pinnacle, to the entire pyramid. So I think that is the biggest innovation that has been made available. The second is you're doing a refresh of your infrastructure. So 25 years ago, when private sector banks started putting out ATM infrastructure, it was a big deal, right? You could now go any time of the day. There would be a guard who would let you in, make sure you're not robbed. There's a CCTV camera to make sure you're doing the right things. You're not actually doing something that you shouldn't do. And then you could withdraw your money, right? But now, why do you need the ATMs when anybody who has cash can actually do a transfer and then you can take money from them? So every corner shop, every kirana can become an ATM. So innovation is both in taking what is available only to the top to everybody, which is the financial inclusion part. Innovation is also, in a way, refreshing functions which will not go away. Because even if we are all digital, we'll still need the physical notes, the coins. And if I can get that money from anybody who has a business, anybody who has a shop, not necessarily have to walk up to an ATM, which is again a big cost for the bank. I mean, imagine the air conditioning, the actual ATM machine, the CCTVs, the guard who is posted outside. It's a big cost to run an ATM. Somebody is paying for it. So if you can make your infrastructure refresh itself every 20 years, that for me is also a big part of the innovation. And then
Absolutely.
you have these generational innovations that happen around what is now we are witnessing around the tokens and what we sometimes call crypto currencies, but effectively tokens, which are getting more regulated. And I think that is the single biggest innovation that you will see in the last 20 to 30 years. So we are sitting on a kind of a cusp of a generational change again. And it'll be very interesting how this plays out over the next 5 to 10 years, Nitin.
Amazing. And how could some of this innovation, or is it being used for poverty alleviation, and some of those needs?
It has to be, and it will be, but it's going through its evolution process. So it's still very complicated because everything relies on something arcane like public key infrastructure. So you need to have private keys, and it's not about the problem with the protocols itself. So one could argue that, look, Bitcoin is never hacked, or Ethereum itself is never hacked. It's the way that you store the keys, the way that you put in money in the exchange, that is always the weak point. But then as a consumer, it doesn't matter to me because my money is stolen. If I don't remember the keys, I can't access my money. So these are practical problems that have to be solved. I think we are still 5 to 10 years away from everybody being able to participate in the token economy. And today, yes, you have the early adopters trying it out, losing money, making money, but that speculative bubble actually will be the filter that gives you useful projects down the line, because ultimately it's going to get some of the trust issues back in a more distributed fashion. It's able to make the tokens more fluid and also bring down the cost of, for example, international remittances, because now you actually don't need to send money from one country to the other, you're just translating between one stable coin and the other stable coin, which is faster. So you don't actually have messaging hopping from one node to the other node, taking 4 or 5 days, and you don't know where is my money in between. So if you send Indian rupees to somebody else and they are supposed to get US dollar, you know how the process is, right? So you have multiple hops, you don't know how much they will get, and there's a big fee in between anyway. So I think wherever you have movement of money, it will get simplified, it will get a lot faster, and you will also not have to pay almost 5 to 8% fee, which is in force today for a large number of overseas workers who work in the Gulf region, who work in Americas, who work in Australia and New Zealand, and are sending billions of dollars home to their relatives and friends every year.
Could this also have an impact on microfinance in some way?
It's already having. So look at it this way. There's always been the productive middle that was left out. So if you looked at rural banks or local banks, they could understand businesses that were generating, for example, $10,000 turnover a month. Then there were those who were making less than $500 a month, right? And the microfinance institutions were looking at this segment. So the middle businesses, the small micro businesses that were doing $2,000, $3,000, they were caught in this middle because they were too big for the microfinance institutions and too small for the local banks. So now this middle gap is getting served. But to your point on MFIs, again, their cost to serve goes down because now you can do a know your customer, do a KYC using electronic means. You don't have to have an agent fitted out with complex gadgetry to go and do that KYC. So that has gotten simplified. The way that you can actually do the reporting and management of the loans is getting simpler because you can also have it done through cloud providers. So the cost of running the MFI business is going down.
Understand. So, and the analysis of, lots of things also becomes simpler, which also de-risks some of these businesses, and maybe makes the finance to the bottom of the pyramid more easily available.
Yes, because there's money at each level of the pyramid. It's just that it takes a different form and it takes a different size of transaction that makes it available to the service provider.
And you did talk about cryptocurrency and I'd call them as tokens. So how impactful do you believe? I mean, you also said it's one of the biggest innovations or something very big which has happened for the last 20 years or so. Can you elaborate a bit on that? The impact of cryptocurrency infrastructure itself, and you already did in some ways in moving money. But what else?
Many other ways. So for instance, let's take the case of Sri Lanka. It's asking its overseas citizens, its diaspora, to send money back, right? Now, if it could do a crowdfunding campaign and issue some kind of a digital bonds, right? It could make the process so much simpler and faster so that you could actually mobilize the funds and you could have them sent to the projects where they're needed to buy medicines, to buy fuel almost overnight, right? So it's going to take probably a couple of months for them to mobilize the money by the current infrastructure. But if you had something in the equivalent of stable coins in each of these markets, and you could do a crowdfunding using tokens, you could have done it in a day, right? So that's just the speed at which you can make change happen. Another example is, it isn't available today, but if you look at how the large retailers are making money programmable. So Walmart has an interesting patent out that actually limits the use of your Walmart coins, right? So if you are a minor, you cannot buy alcohol or cigarette with it. If you are a good customer, it actually will grow. right? So the rate of interest actually is built into the money that you have. So if you are a good customer, they will give you reward points, and then your money, instead of having 20 coins, you will see that you have 22 coins. So some of that programmability of money is going to be very interesting, and it will shape consumer behavior massively. Because now, let's say you're doing consumer programs for incentivizing a given brand, right? You can actually do that programmability directly on the money which is being used to buy the brand, because now the money knows what it is being used for. But then the big debate, Nitin, is going to be around loss or perceived loss of individual privacy. Because today, if I carry a 100 rupee note and I pay with it, the 100 rupee note does not tell the next bearer where the note has been, right? But now the journey of that 100 rupee note, if it's in the form of a digital currency, can actually be mapped. So you can actually see where the digital currency was day before, yesterday, and today. So it becomes a big question in terms of trade-off between the convenience and the reach and the inclusion, and the perceived loss of individuals' own privacy. So should it be completely anonymous, or should it have some kind of pseudonym that can be traced back to you in case there is an issue? But in normal situation, nobody will bother about it. So I think that's the biggest question that everybody is trying to solve, because without solving for it, you will not have adoption.
How about this other question you had about the federal control, the loss of the federal control that some other countries have faced, for example, by allowing US dollars to be, the currency within the country? I mean, isn't this a similar situation if countries were to allow this?
That was one of the biggest reasons that you had countries, small islands in the Caribbean, try out CBDC. So the first ones to come was the sand dollar, right? So countries like Bahamas created that because not only is the US dollar costly, but they also have to look at the cost of replacing the US dollar, because that's a cost on them. So having to take the US dollars and ship them back to the US is also a big cost for them. So they said, why can't we have our own digital currency? But you will see this digital currency come in the wholesale form, which is between the central bank and the retail banks, the commercial banks, and not between the retail banks and individuals, customers like us. Because in many markets, customer payments is not such a big pain point, but the friction, the delays are more in the big banks making the settlement and clearances amongst themselves. So if you can handle the wholesale issues first, get the public confidence that, look, this is something that you don't need to fear, that privacy concerns will be handled, then you can adopt the retail or the second tier of the digital currency. So we see that in larger countries, that's the model of going for wholesale and then for retail. So the retail part, the visible part will happen later. But in very small countries, for example, in the Caribbean, you're going directly into the retail because A, the wholesale is smaller and the retail has big benefits for them. So each country will take its own interests and priorities, and they would not blindly copy what other countries are doing. So you'll not have a even distribution, Nitin.
And for this, you don't need the proprietary cryptocurrency, right? I mean, you can have your country's own digital currency infrastructure to take care of this.
Correct. That's right.
So the next question was also going to be something on the similar lines, that what are the risks of a predominantly digital currency in a country, or, in terms of, what people are experiencing today, losing my money and losing my token, losing my way to access it, or money getting hacked.
There's something more fundamental, Nitin, because if you recount the natural disasters, then in times of emergency, if you don't have money that you can spend, you don't have money. So there was money which was in digital wallets, but electricity was in limited supply. Some of the people couldn't use their phones. Then how do you make payments? Because you've stopped having the notes and coins in your pockets at your homes. You're reliant on your mobile phone because that's where your money is. But now there isn't electricity for you to charge your phone. So these are practical problems that happened in Japan after the earthquake. So any form of digital currency will need to have some kind of a backup that can be activated in times of emergencies or natural disasters. So that is a must. But even during natural, normal times, like I mentioned, their acceptability will be a direct proportion of how individuals' privacy is handled. It is also going to be a function of what will be the role of commercial banks, because some of the retail banks actually see that the digital currencies are taking business away from them, because if the central bank is starting to manage the bookkeeping for accounts or tokens, then their fee income is going to go down. People will stop depositing money with the banks because they would have more of their money as central bank digital currency. And central bank digital currency can also pay you interest. So there might be some competition between the private sector bank and the central bank if you are creating some interest-bearing CBDCs. So banks are not very sure how their role is going to change, but if they make income from being the custodian of your identity, so instead of being the custodian of your money, they become the custodians of your identity, then they have a good business model even in the future. If the government agencies in that country say, look, the digital currency is our business, you stay away from managing it, and the deposits move from private banks to the central banks. So they will have some other business to play in.
Right. So they will have to innovate in terms of the value add that they are going to continue to give to the consumers. And
yes, because as you start having more of these tokens in the wallets of customers, the less you want the customers to be completely responsible for their own credentials, their own private keys. And you will essentially then break down and cut the private key and store it in 3 or 4 places. So one could be with your friend, the one could be in the bank, the other one could be in your phone, so that even if you forget it, lose any one of those, you would still be able to get that private key back, because if you don't have the private key, the money is not yours.
Right, right. What do you mean by cut the private key into 3 parts?
Essentially, you have a kind of a what is called in the technical parlance a multi-party compute, so that you can still get to the private key if you don't have access to one part of it.
Okay, so if there are 3 parts, the 2 parts can also make the private key back. Is that what you're saying? Or
yeah, so let's say I lose my phone. Can I still get my private key back?
Right.
Or I wrote it down on a piece of paper. It's in my drawer. And the classical example, my house got burned down. So where's my money now? It's still there, the tokens, but now I can't prove my ownership. So the way you can still continue to own the money that you own is going to be a good business for retail banks. So for financial service providers today, who feel threatened that, look, digital currencies are going to take business away from them because people will not deposit money from them, people will not give them the fee income. So they will have a different business in 20 years.
Right. So are biometrics not likely to develop to an extent that your biometrics somehow become related linked to your private key?
Biometrics also are fluid, because sometimes they change with time as well. So you are looking at models that combine both, but biometrics on its own as a standalone will not be the solution.
Wow, that's so insightful.
So these are big changes, and not all of these are future tense. Many of these are in present tense, Nitin. And when your viewers are actually stepping into the productive phase of their careers, I think they will be the first to get to grips with these changes.
Right, right. So we are going to be positioning, some of this interaction in a way that helps them understand what should be done about it even now. So yes, whatever's going to happen in the future, they're going to be part of it with everybody else. But giving them, enough stimulation to do more research about this, to understand, and then take it in a direction which makes more sense, for the country, for the world. I think that's where the opportunity is for our students. So I want to go back as a last question to non-financial infrastructure again. There is a lot of money that goes into all financial sectors, to all infrastructure sectors. Any infrastructure that is built that needs a lot of capital investment. So in your view, financial services is definitely very important. India has done a lot, and hopefully it'll also reap the rewards of the investment. What could be some of the other infrastructure segments and spaces where the investment can bear a very good ROI, like financial services? What could be the other infrastructure spaces that you see in India?
There are a few that just come to mind because they are missing. So semiconductors is one, which has become compounded because of the geopolitical changes. So you know that a majority of the semiconductors comes from Taiwan. Now with the changing geopolitics, it becomes a national priority to safeguard the supply chains for things as simple as your mobile phone to the more complicated supercomputers, because everything needs semiconductors unless you are going into the quantum computing age. So that is still some distance away. So India is way behind on semiconductors as a kind of a supply input, which has to come up. Secondly, in terms of energy, you do have, let's say, the consumer facing electric vehicles, for example, that are catching investor attention. But then the capacity for having the distribution network for recharges, the ability to have the batteries being built locally, I think that's something that has to come up together with the just big potential of solar, for example. So trying to do more in the renewable energy is definitely then becomes a priority for India. And the third, I would say, is again, healthcare, because if you're looking at reaping the demographic dividend today, you would also be paying in a way, the demographic loan in 20, 30 years from now. So unless you start planning for that upcoming change in demographics 30 years from now, you would be left unprepared. So I would rank them in the order of energy, healthcare, and I believe the agriculture and productivity is already starting to see some technological changes. So that infrastructure, especially with the structure of the agro marketplaces, which will again hopefully get executed, the way that technology is coming in handling the supply chain and provenance, and the way that you are getting more information about weather patterns, irrigation patterns to decide on crop, that is already happening. So I would say things that need to happen would definitely be on the energy and in fields like healthcare and medicine.
Incredible. Yes, yes, makes a lot of sense. So this has been amazing. It's been so educative for me, Shubhrendu. I'm sure this will be somewhat educative also for our students. Thank you so very much for your time. I know we've taken more time.
My pleasure, Nitin.
Than what we have planned.
Today I join you from Davao City in Philippines, so not in Singapore. And like I say, always a a very fulfilling experience to be able to share what you're observing and share it with the new generation, which I always say is the new and improved generation.
Awesome. Awesome. So yeah, thank you once again. Look
My
forward
pleasure.
to having more such conversations with you on some topics like this in the near future.
Look forward to, Nitin. All the best. Take care.
Bye-bye.
Bye.